Yeah. Sorry, something's just popped up from LinkedIn. Right, everybody. So welcome to this discussion, this Facebook Live discussion on income protection for freelancers, gig workers, people like me. I have with us today Lisa Wells. So she's the FMI product chief product actuary. So she's a proper actuarial science person who's going to give us some input into income protection. But I wanted to give you a little bit of an explanation as to why I'm having this live event. So about just at the beginning of lockdown, when all this chaos happened, I wrote an article lamenting the fact that there are so few financial products out there for freelancers, for people like myself, or people who have dual jobs, part-time jobs. I just feel sometimes like the financial industry forgets that this massive industry of freelancers and gig workers exists, and they only look at people who have a full-time job and have a pay slip. So next thing is I get a call from Grace, who's the PR person for FMI. And she says, wait a minute, my FMI is bringing something to market. Please come to the press launch. So I went to the press launch and found out about the product. And I thought, well, this is something I'd like to share wider with those many, many people that are like me and are looking for cover that really allows a lot more flexibility as freelance workers. So I know many of you who were liking this and taking the reminders are in this industry of this flexibility of the world. So hopefully you're going to post your questions and we'll get Lisa to answer them as best as she can. So, Lisa, I'm going to start with my questions to you. So obviously during lockdown, welcome, by the way.
Thanks for having me.
So I wanted to, obviously this is what happens. So lockdown happens, and I think a lot of people realize how vulnerable they were financially, especially if they didn't have that big employer to look after them. And certainly from a health perspective, I saw a lot of interest in things like life insurance, people wanting to find out about wills. But so income protection obviously plays a big part in that. But I also found people got confused between what income protection does and what retrenchment protection does. So maybe you could just unpack the two up front so people just understand the difference.
Sure. I think you're right. People confuse when they see sort of income protection being referred to as loss of income. Obviously, there's a confusion between retrenchment cover or not. So when we refer to income protection, we specifically refer to being paid a monthly income if you can't perform your occupation, but due to something that's physically happened to you. So an injury or an illness, or you're diagnosed with something, and that prevents you from being able to perform your occupation. On an income protection policy, you typically choose a waiting period, so something like 7 days or maybe 1 month or 3 months, and that determines the period of time you need to be off ill for before your income protection policy would start paying you. So, for example, on a 1 month policy, you need to be off ill for a month of work before you, and then a shorter waiting period, say 7 days, would pay out on more minor things where you've only been booked off for 2 weeks, say, for example. Retrenchment cover obviously is something different, and that's really where you paid out if you are involuntarily retrenched or made redundant, and obviously that might pay out an income. Now, you do get retrenchment cover on credit life type of policies, and you can actually, many insurers do or have offered it as a top-up onto income protection. But I think just to be clear, when we're talking about income protection, I guess today we're talking about something physically happening to you, like an injury or an illness.
So let's take COVID as an example. If I contracted COVID and I had to now be quarantined for 2 weeks, and I think this is especially important as we exit lockdown. So we're now going back to work. We're expected to be back in the office, expected to be doing things. But I've now contracted COVID. Maybe I'm not actually that sick, but I have to stay at home for 2 weeks. Would my income protection cover me?
So it depends, and this is where it's always important for people to understand the type of product that they buy and the type of cover that they have. So if someone has a short waiting period policy, such as what we call like a 7 day, you've been off sick for 7 days, then we consider your claim, and that is what we would recommend for someone who isn't working for an employer, doesn't have sick leave. Even though short illnesses will still impact you. So someone on a short waiting period policy, we would absolutely consider, a COVID COVID claim as sort of a minor infection. We typically cover minor infection, sickness type of claims have been booked off for a week or 2 weeks. You would need a confirmed diagnosis. And so it's unlikely that we'd consider claims where you're just self-isolating because you've been exposed to somebody. So being booked off by a doctor or having a diagnosis for COVID, we would pay. Typically the claims we're seeing at the moment are around 2 to 3 weeks. So if someone has a 1 month waiting period policy, for example, and they need to have been off for a whole month before they claim, might pay an income, then it's probably unlikely a COVID claim would result in a claim unless there's significant complications and you've been booked off for a lot longer.
Okay. I mean, I think that's important to understand the length of your waiting period, because I think that's where people get sometimes disillusioned because they don't understand their cover and then they think it's going to pay and it doesn't. But the other one I wanted to ask you about is the difference. This is where I find people also get confused. It's the difference between income protection and critical illness cover. So critical illness cover, if I get cancer, if I get heart problems, how do those two work? Are they complementary or should I consider one over the other?
Sure. I can talk for a long time on this. So income protection really aims to replace your income if you can't perform your occupation. So that's the aim of income protection. So you can't work, you've lost your income, you need to keep it going while you're not at work. Critical illness is paid out on diagnosis of a specific condition. So if you meet that definition, and examples of things like cancer or a heart attack, there's obviously a long list of different medical conditions. And the intention of that is to really, I guess that product was developed actually in South Africa, critical illness, by, I don't know if you're aware, Dr. Barnard's brother way back when. So it's a South African invention. We like to always refer to it. But that is, the aim of that is really to help with excess medical expenses or lifestyle changes. If something happened to you, you're paraplegic or something like that, and you've got these massive home improvements you need to make, or your medical aid doesn't cover for those medical expenses. So that was always the intention with critical illness. And traditionally it's paid out as a lump sum benefit. And so I think the two really work in conjunction. And I mean, maybe what I can just take you through is some research that we've done when we've sort of developed a solution and a recommended insurance solution to cover your needs in the event of let's say something like a breast cancer, as an example. We spent time talking to claimants or talking to those who had insurance, who didn't have insurance, and what actually did they need in the circumstances from a sort of insurance policy. And there were a few things that came out from that research. The first thing that actually came out was that people need to understand their diagnosis more. So we've sort of added on a medical second opinion benefit to our critical illness solution, and just giving somebody that access to, what other treatments are there out in the world, and what is the best solution, treatment and all the rest. And then obviously the need that we've spoken about now is being the cover for additional expenses. So if you don't have medical aid, or your medical aid will only cover up to a certain point, there is this gap where, a small lump sum does really help, meet that need of those excess medical expenses that would happen to you. But I guess one of the biggest needs is really the need for income while you're not able to work. If you have something like a cancer or breast cancer and you're going to be going through chemotherapy or various treatment, you aren't going to be able to work, or you may be able to go back to work during periods of time, but that need for protecting your income is definitely there, and that's where the income protection part comes in. There are obviously some softer issues around counselling and logistics and things like that, which are nice, like value-added benefits we've added on. But what I wanted to come back to is our recommended sort of combination. So being able to protect your income while you're not able to work and going through treatment, I think is important, which talks to the income protection part. Having that extra lump sum. What we've added on is a CI income benefit, where what we'll do is...
Critical illness,
sorry, yes.
like jargon. CI, critical illness benefit. Okay.
Insurance jargon. Critical illness income benefit, where what we'll do is pay out your income protection. If you add it onto your income protection, we'll pay out your income protection for up to 12 months, guaranteed. So you don't, what it does is it removes away that the insurer is assessing you, are you able to go back to work or not? And it kind of gives you that comfort period of, being able to take that time off work if you need it. So I think everybody's situations with their illness is so different. Some people might go into remission quite quickly and be able to go back to work, but actually might just, and your income protection would stop. But you might just need that time just to recoup a bit and spend time with family or take a break mentally. Other people, for example, might want to keep working, so they're worried that the income protection would stop paying if they go back to work, but they want to work because of that mental well-being of having a purpose during that period of time. So I think that's a really great benefit in terms of guaranteeing that whether you've got a stage 1 cancer or a stage 4 cancer, we'll guarantee that income protection. And then what we'll also do is top that up to 130% if you have a critical illness income. And the purpose of that came out of the needs being people are often, there's extra monthly expenses once you go through something like that, particularly sort of if you use cancer as an example again, things like needing to change your diet and exercise, leading a more healthy lifestyle, taking extra supplements, all of that healthy lifestyle and excess, childcare, all things like that, all have an impact on you. So just replacing your income might not be sufficient, which is where we sort of felt a top up. So I guess to answer your original question, we really recommend a combination. We think income benefits meet the need more appropriately than, and it's in fact cheaper to purchase an income protection policy with a sort of a top up of a CI, of a critical illness income, as opposed to buying, a few million rands worth of critical illness lump sum cover. It's a cheaper way of insuring and trying to meet your needs.
And it was just interesting for me that you highlighted cancer there, because I was actually looking at some stats this week, claim statistics on critical illness. And for women, it was terrifying. 60% of critical illness claims are cancer related. And we know breast cancer is the number one. 60%. And the average age, Lisa, was 52. And I'm 49, by the way. That's very young. And I think that highlights, actually, I think people forget that when you're young, you think, well, what do I need all these things for? But that critical illness, and as a freelancer, it always worries me. What if I do get cancer? And exactly that, I'm in a position where maybe I can work a little bit, but I don't have my energy. I just can't produce at the same level. So to know that I can still work a little bit, but still get an income, I think is a very, very powerful. It's actually for me, that was really interesting. It was kind of powerful. We had a question asking where you're from. So obviously they joined a little bit after it started. So I did put up the little banner there. This is FMI for everybody. We're speaking to Lisa Wells. She's the Chief Product Actuary at FMI, which is a long-term insurance business. And she's chatting to us about income protection, specifically for the freelance gig economy part-time worker segment. So now on to that part. So we've understood, I think we've explained what income protection is, how it works in terms of the other types of covers. So now for me, I have income protection, okay? Because to me, it's just a non-negotiable. I don't have an employer who can bail me out. But I know one of the challenges in offering income protection has always been this multiple income. So, I earn multiple incomes. You may have a musician who does a lot of gigs, who has multiple incomes. Maybe sometimes they're with an orchestra, but sometimes they're working on their own. They may do studio work. Then you've got dual careers. Maybe you've got a teacher who's teaching during the day, but has a pastry business or pastry chef at night. How is this product innovation going to address those specific issues?
Cool. I mean, this is something that FMI, we've spent quite a lot of time coming up with these sort of solutions. In fact, we've been talking about it for years, and it's so fortunate for us, I guess, that it's come at the right time, because I think so many people now, particularly after this COVID pandemic, may have been in the situation before, but more so now, people are going to be looking to supplement their incomes in doing something, a side hustle on the side and all the rest. So I think it's becoming more and more relevant, particularly with the younger population in the way that they prefer to work. I mean, long are the days where, your father or grandfather worked for the same company for sort of 40 years. It's just the way of work is definitely changing. So look, self-employed people and commission earners, they've always really typically been able to buy income protection and on a normal, fully occupational sort of definition. But as you say, there are some occupations and situations where insurers have traditionally been hesitant to grant cover because you're working on short-term contracts and they can't sort of assess your ability to perform your full occupation, or you're working a few hours a week, and as you say, in different occupations. So where I guess our solution aims to do is just to ask a lot more questions about your unique circumstances upfront in getting a quotation or working with your financial advisor, and allowing you to insure all your income. Traditionally, insurance would look at your primary occupation and insure only that portion of it, where we feel that you should be able to insure all your parts of your occupation, and we might be able to do that on one benefit, or we might be able to give you slightly different definitions for the different elements. But I think it is important that people do need that full income. So yeah, it's really around during that upfront stage, asking enough questions to understand your unique circumstances so that we can tailor make a solution for you.
And how do you prove your income? Because obviously your payout and your premium are all going to be based on the income. But if you've got all these different incomes, how do you prove to you, because I don't have a pay slip, what my actual income is?
Yeah, sure. So we typically would look at average income earned over the last 12 months from a certain occupation. If people are working in sort of two totally different occupations, for example, you're doing a desk job at night and you're a desk job during the day, but you're a baker at night, we can insure them on different benefits, and we'll look at your proof of income on those different elements. And there's different forms of income. We might look at bank statements or financial statements or tax records. But I guess looking at over a period of time would average over the last 12 months as to give us an indication of, I guess, your earning potential. Maybe COVID is not the best example to use over the last 12 months, but you get the principle.
Yeah. And one of the negative perceptions, and I mean, obviously, I've been writing about the insurance industry for many years, and income protection always did have a little bit of this kind of a sense that people felt, well, I'm not going to get paid out when I come to claim because it's so unclear what I'm going to get paid out for. Like, when am I going to be paid out? So you've actually worked on event-based cover. So from what I understand, this is kind of a list of conditions that guarantee a payout. So upfront that if something happens to you, you will be paid out for this amount of months. Perhaps you could just give some examples of that.
Sure. So on an income protection policy, the definition is typically, inability to perform your own occupation due to an injury or an illness, and the claims assessors would assess, can you perform your occupation or not? What we've introduced, and we call these sort of fast-track claim events, is, as you say, a list of about 200 sort of odd procedures and illnesses and conditions, and these are sort of the things we've developed from what we've seen in our own claims experience. We've seen these claims over the last 25 years and developed and been able to actually put a exact definition, and examples of things like if you fracture your tibia, you fracture your leg, a cancer, stage 1 or 2. So by listing out those definitions, and what we've done is we've put a specific payment period to it to sort of say, well, if you are with a specific payment period of, say, 10, I'm using the bad example, 30 days, you might get paid, or 2 months for a broken leg or broken back. Or we've got a long list of the different things. So what that does is two things. It gives certainty that if you get one of these things, these procedures or conditions or illnesses, you're going to get a payment, and you're going to get it paid for so long. If you are still ill after that period of time, we will then still obviously consider paying your claim if you cannot perform your occupation. So then comes in the the assessment of can you do your job or not. And why we call this fast track claim events is that we are able to then assess on an X-ray or on less medical evidence than I guess your doctor or your OT or someone having to prove that you can't do your job. So it just makes that claims process a lot easier, and there is that certainty of knowing which conditions would pay out.
Yeah, you don't want to get into an argument. I've got a broken leg. Yes, but, most of your job is done at a computer, so that you don't have any of those discussions. It's there. We automatically pay out. That is the minimum we'll be paying out. If we need to pay out beyond that, then we will. So I was actually thinking when you were talking about when my husband broke his foot. Now, he broke his foot, which was one thing, but then he developed a thrombosis. And I don't know if anybody's experience of thrombosis, but you have to lie flat. You can't move. You can't even get up to go and get a glass of water. So you're absolutely man down. So I imagine a thrombosis, for example, would definitely be one that would be, I hope, is covered by your event-based policy.
So definitely. So, as an example there, the foot is gets quite technical about which exact bone you broke, but an example of a fractured leg, a tibia, you'd be paid for 75 days, or a fibula, 45 days, and we'd pay that upfront, as I say, on acceptance of the claim, rather than sort of having to wait for factual, that's factual evidence we can get, rather than having to sort of wait for a doctor's report on whether you can perform your job or not.
So does this allow you to cover professions that have sort of historically not been able to be covered? So I think, for example, of a musician, because of course a musician breaks their baby finger. If I break my baby finger, it's one thing. When a musician breaks their baby finger, it's another thing altogether. So often they've struggled to get income protection. Or if I think of somebody like your typical, we always use this example, I don't know why, but it's the oil rig diver who's got like uninsurable. So how can they then be insured through this event-based claim?
Yeah, so this is where our product innovation actually started a good few years ago, and our thinking sort of started, because there's so many occupations that would come in at new business stage, and you were like, sorry, we can't insure you because you're just too high risk. And there's a lot of occupations like that where maybe the number of time, the sensitivity to claim is so high, as you explain. So by developing out those claims criteria, what we aim to do was actually cover as many, we're covering up to sort of 90% of the claims we see on income protection anyway, by having, but against specific criteria. So we can actually then give those people that list of definitions, which is our sort of event-based cover, as opposed to, and take out the subjectivity around can you perform your occupation or not, or you're too high sensitive to claim. So having, why should people in those situations not be able to claim for just because they're sort of higher risk of injury because of their occupation? At least they are able to get cover for cancers and all the common things that happen to everybody else. So with certain occupations like that, we might have a restriction on one or two or few of the events that they're particularly high sensitive to, or charge them a little bit more for certain aspects of it. But it has exactly done that. It's enabled us to remove our occupational definition from it and create a product that is just a list of defined events. If you can claim on one of these events, we will pay out, and it removes that subjectivity of how long you have to pay the claim for, because it's paid for a set period of time.
And the other one that I thought was very interesting, when I thought about, I've got friends who've got young kids. There's a lot of them are stay-at-home moms, but they do have some morning jobs, and they do a couple of hours of work a month or a week. And of course, that income is valuable to the family. And we never think about insuring it. And as far as I'm aware, until you introduced, there is no other insurer who will just insure for, that kind of small part-time job that perhaps a stay-at-home parent has.
Yeah, and again, exactly, that talks to the sensitivity of doing only a few hours a week job for an insurer. There's often an incentive to, it's difficult to assess those claims because there can be an incentive to claim during difficult times. And that's why insurers have always been hesitant to cover that. But what makes our product, it's quite transparent. If you get one of these specific conditions, we will assess you or not. It's sort of taking out that, is someone trying to sort of, is there another incentive to claim here or not? So it just makes it very transparent for the customer, for the insurer, and makes it easier to provide cover. And it's really good cover. As I mentioned before, we're paying around 90% of claims we would typically see on income protection benefits. So, and then it is very subjective. So I think one thing in some research we did recently, one thing that stood out to me was that so many people sort of thought, but income protection, but I didn't know I could qualify for that. I didn't know I could buy it. I thought that was for professional people or salaried people. And I think people don't realize that it is such important cover, and that everybody should be able to access it, because those few hours a week of work, that someone else is bringing in supplementary income. I mean, I think we've seen over this last period of time, when you don't have those bits of income, it really can impact a family.
And it was also very interesting you spoke about that, because when I was at your launch, you spoke about cover for students. Now, I've got a 20-year-old son. He's studying at the moment. And I also know the mortality, or it sounds terrible, not mortality, but the injury rates of young men. I think it actually completely spikes if you look at claims. Most of the claims for car accidents, for example, are by males between the ages of 18 and 26 or something like that. And I'd never thought about the impact and I mean, I know people who at a young age were in car accidents and were left disabled to some degree for the rest of their lives. So you have actually got parents can, or even the student themselves can take income protection for their future. Just explain how that works.
Sure. Yeah. I mean, I hear you. I've got 3 boys. 2 of them are teenagers, and I'm terrified about what they're going to get up to in the next few years. So we offer students, and even as young as matriculants, sort of the option to buy up to 12,000 Rand a month income protection, plus you can get a small lump sum benefit. And I think the real benefit about buying a policy as a student or at a younger age is that it's exactly that. It's protecting your future earnings. So yeah, something might happen to you now, and you might have a short-term impact, and your parents will probably help you out in terms of many can't afford to pay for medical expenses. But it's really protecting that future earnings. If something does happen to someone, and if you had to add up what you earned over your lifetime, and something severe happens at a young age, that person then becomes a burden on their family and them having to look after it, and you also lose that future earning potential. So that's really the idea behind buying cover at a younger age. You can obviously convert that cover once you are performing an occupation, increase that cover to make it appropriate for your occupation, and get a full occupational disability definition. And then I think the other important aspect around it is that future insurability. So, the cover needs to be flexible enough that you can flex it up to the cover that's appropriate, as you get older. And I think buying cover young while you're still healthy is a good thing to advise people to do, because often people will only realize when it's too late that they need cover. They will try to go for cover, go for a medical underwriting, and realize that they're going to be loaded because they've got a health condition, or they might be declined because their health is now at a point where they can't actually get insurance. So buying cover at a younger age, and flexing that up, or using the future insurability options where you can then increase your cover at a later stage without medical underwriting or limited underwriting is not a bad idea. I think particularly, mental health is becoming, it's not only the accidental stuff for students, mental health is becoming a huge issue with younger adults. So tapping, I think, into that good health early on is a great solution.
I mean, I laughed when you said taking out cover later, because I had a back injury about 10 years ago. Well, you can try. Thank goodness I had my income protection in place already, because it is excluded now completely. So if I go and take out any cover on income protection or anything like that, disability, my back is excluded. And there's nothing I can do about that. So you kind of want to take the cover whilst you're still fit and healthy, and before age hits you and all those things start.
I think that's the thing. The value of insurance is only really felt when there is a need. And I think maybe this COVID pandemic has made people think about it a bit more seriously now.
And I'm just going to let the people listening, we're getting lots of people saying, thank you so much. Someone said they wish they'd met you 15 years ago. Yes, Diane, you should take that income protection out before the back injury, those sort of things. But if anyone has a question, maybe pop it on now before we close. I see something has come up. If you're on a fixed term contract and it is drawing to an end, how do you protect yourself? So that's an interesting one. That's a really good one. So you're on a fixed term contract. You can prove your income for the 12 months, but it's going to come to an end.
Our underwriters would look at the situation. If you've got a fixed term contract, it's going to be coming to an end, but you potentially will be looking to renew your contract, or not renew it with the same employer, but look for alternative fixed term contracts. We would look at how you're earning over the last year or the last few years has gone, to be able to grant cover. If someone is able to access a full occupational definition, I cannot perform my occupation, and then their contract ends, what we would do is you could continue cover, but on an event-based product. So, and that would cover you for those lists of defined benefits. So someone, I think, in that circumstances should still be able to access at least the defined events benefit product, which has great cover, as I mentioned. And if their term contracts or their earning history has shown that they do tend to gain contracts more regularly, they may be able to even take out an occupational definition product.
Okay, great. This actually was a very good question, because many of us work from contract to contract. And that is often the issue. Again, I was bemoaning this fact in my article a few months ago. There just isn't, unless you've got that pay slip and you can prove all these things, it gets very, very challenging.
Sorry to interrupt. I'm just going to add there. So that's part of the upfront questions we've developed, is to sort of understand the gaps between contracts, asking quite specific questions around your personal circumstances to sort of see, can we give you a full occupational definition product or otherwise an event-based product? But there is still a solution.
Fantastic. So maybe to end off, you can just let us know, how do you go about, so if somebody's listening, how do they go about getting income protection in general? Like if they went to see an advisor, I think FMI is advice-based. Oh, wait, I've got another question coming in. Well, let me answer that question. I know FMI is advice-based, so you'd have to contact a financial advisor. Is that correct?
Yeah, so we do recommend, speaking to a financial advisor. They really can help to advise the right type of cover for your personal circumstances, and your lifestyle, whether you've got children or not children, and your holistic sort of financial needs. So that is our advice. If someone doesn't have a financial advisor and would like us to put them in touch with someone, they can visit our website. I see you've got it up there, www.fmi.co.za, and you can click on Get Covered, and we will put you in touch with a financial advisor. And then if there are any financial advisors, I guess, who would like to take out a contract with FMI to be able to write our business, there is a financial advisors tab where you can click,
some of the people who are on this are advisors. I can see that. I know some of them. So hopefully I heard that. And another question that come through: if you are already disabled and you work 10 months out of the year, can an income protector work for you? Now, that's another interesting question. What if you already have a disability?
It would depend on the nature of the disability. So I guess in the same way that you sort of say you've got a back condition, the medical assessors would assess the severity of your condition and be able to assess whether you are able to get cover or not. Often it might be with an exclusion for that particular case or not. If someone is significantly disabled, you probably won't be able to gain access to insurance at this stage, but it depends on the severity. You might be able to gain something with an exclusion on psych condition or a certain condition. So it would be up to, I guess, up to the
this person has cerebral palsy. That's actually the condition. So that's, as the actuary, was that a bit? Do you need time to answer that question or?
Yeah, if we can, I can definitely make sure our underwriting department respond to that. My gut feeling is possibly not being able to access cover, but I don't know the condition I'm not a medical person, so in terms of assessing the condition, I can get one of our underwriters to respond to that.
Yeah, so I mean, possibly the event-based cover could. So I was thinking about something like if you did have a disability that was perhaps skeletal, you could perhaps still have cancer, but maybe that would fall under a critical illness. So I think for me it would be very worthwhile sitting with an advisor and saying, right, maybe I can't get income protection, but I can get critical illness because I could get something that's not related to my disability, like a cancer or a heart condition or whatever it may be, and still have cover for that. So I think that's
it's something that FMI are quite passionate about in terms of trying to give as many people cover as possible. So the focus of our recent launch has been around occupations and working in different occupation statuses. Our next one is actually on, that we want to try and tackle is actually on that topic around how do we give people who are already disabled, who have diabetes, who have certain conditions, can we tailor our product to be able to give elements of it? So we're probably not quite there yet in terms of that, but that is something that's been on our that's part of our product innovation drive.
And do you find that you get feedback from advisors? Do advisors come to you and say, I'm just getting a lot of clients asking these questions, and you kind of take that on board? I mean, how do you get your information as to what product to develop?
Yeah, we do a huge amount of research. We really, in developing a product, you talk to so many people. We do customer research. We look at our own claims experience and our own statistics. But exactly, I think customer focus groups are extremely important. And as I mentioned with our critical illness development, it was really speaking to people who've gone through those circumstances to address their real need, rather than what we believe somebody needs. So that information comes through advisors. It comes through what's happening in the market. But I think ultimately doing customer research is where we like to get most of our info.
Great. Well, I just want to say thanks, Lisa. It's been really, really useful. And I'm glad we had this opportunity to unpack the product offering. As I said, we need to see more products coming to market that meet the needs of this incredibly growing segment of the economy, which is people who do not earn a permanent paycheck, because we don't want to earn a permanent paycheck. Our freedom. So thank you very much for your time. And if there are any questions that come up later, we'll make sure that Lisa gets them and can come back to you. Super. And thank you all of those to you who've joined us.
Great.
Thanks. Thanks, Lisa.
Thanks.